Hello everyone and welcome to Live Trader Talk number 6. So just to introduce myself to you, my name is Morgan. I'm the head of trading at the MSE Academy, and I've been trading for the better half of a decade. I've also been teaching students in over 30 countries around the world, teaching them how to trade and invest in the financial markets. And for the purpose of this video, I'm going to be going over the financial markets, the progress of the trade ideas that I've shared in the previous trader talks, and then providing you with a new trade idea at the end of this talk. So we're going to be going through a couple things, especially given that it's month end. We're going to be taking a look at the overall market performance over the last month, over some key aspects of the market. And then right at the end of this talk, I'm going to be sharing with you a new trade idea that I'm looking at that I want to get in with very soon. So to get started off with, I normally look at the VIX. So the VIX Volatility Index provides us with a general volatility overview of what volatility is moving through the markets. So like I said, it being month end, we're going to be looking at it from an overview of it being a monthly look back. So this being now the beginning of November, we're going to look over the month of October. So in October, we had the rather big setback that I shared in one of the previous trader talks, where Trump shared a whole bunch of tweets reacting to what happened in the China-US trade war, where China was trying to make a move on rare earth minerals to create more control over it, and Trump basically reacted or overreacted and sent the whole market off the edge. So it was quite intense being able to trade through that. But as you can see on the VIX Volatility Index, this is basically what happened. So it was running up to the 10th. The 10th of the 10th is when the post went out. It was Friday. I think it was about 10 o'clock in the morning US time. So it was around about 4-ish o'clock. And I remember it quite vividly. I just watched the market literally collapse before my eyes. And I was very lucky that I was out of my one position that I was trading on the US markets. And yeah, it's sometimes better to just avoid than to be involved when the market is collapsing like that. So just to take a look at the VIX Volatility Index, I've put up this blue vertical line here to indicate what date was the beginning of the month. And then the horizontal line shows the opening price of that month. The trend line shows the trajectory from the beginning of the month's open to the end of the month's close. So as you can see, the market was quite flat, trading in the 17s level, broke up all the way above this 20 level, and then the following days, this I believe 10th of the 10th was a Thursday, so you could see how the following week we had a lot more volatility spiking up, and then that volatility died down. You can see, however, volatility has stayed above that 1750 level, and there has been a move towards that 20s level now. Going back historically, you can see the last time we had a very big spike was during the last US-China trade war. That was where there was also a lot of tweets thrown both ways, but Trump also opened up with putting tariffs against many countries around the world, including the country where I'm from, which sucked because I watch prices go up. But that's just something we got to deal with. So you can see that the volatility back then was much more extreme. We rose all the way up to the 40s, 45s levels. But as you can see, the market traded back down into this lower zone. So over the year, the market has consistently stayed around the 20s, 15 to 20s level. And you can see that the market has bounced off that level, the 1750s level, and is now pushing back higher. So I do watch this throughout the day just to make sure that I'm in tune with what the volatility looks like in the market. I can definitely see there's a heightened level of volatility trading in the market right now. Things are moving a lot faster. You've got a lot more chop. The market's ranging in much wider ranges than normal. and that's just a byproduct of volatility. Volatility is good, but volatility like what we saw between the 10th and the give or take the 15th to the 17th was more than you would necessarily want in terms of trading the market. So going into the next market update is the US 500. So again, the US 500 on the 10th, this was what I was watching. The market sold off massively. I was actually looking to go long in this market. And luckily I got stopped out of my position, or else I would have really caught a falling knife that would have hurt badly. This is a perfect indicator of why you want to be trading with stop losses, especially for intraday trading. If you are intraday trading and you do not trade with stop losses, you're either mad or you're uneducated. So get educated and use stop losses when you're trading on the intraday, because if this news popped out and you were not there, now you've got an open position that is in a massive loss, and the market is shifted into a new fair value area, and there's possibly no way that the market's going to return back to that point before you get stopped out of your position or worse off, margin called. So you could see that the market sold off all the way down to these levels down at the bottom, and then the market made a really strong recovery. So in terms of the overall market performance, it was interesting to see that this last week's candle actually gapped open. So the market gapped open on Monday and made a very strong bull run to the upside, and then you could see how the market started selling off to the downside. Now, I tried to catch some of these short positions over here. I caught a few of them, but I'm not going to lie to you, I didn't succeed very well. So I probably I wasted more time for the amount of money that I made back. So I really actually just stepped out of intraday trading on this. I have been doing some intraday trading a little bit more now, but very unenjoyable, I have to say. So if I just break it down into one of the trades that I missed. So this was quite painful because you get stopped out of a position and then you watch the position play out in your favor, and you just got to sit there like eating your own words. So I was watching the market build up here to within this range, and I knew that there was a possibility we were going to see the market moving higher, and I was basically waiting for this range break over here. Now, the reason why I felt like the range was going to be bullish is that I could see, although we had this overall downward market move, I felt like there was an opportunity now that we had broken this downtrend here. I know these are not respecting its level very well, but basically what I was watching here was this downward trend line, the price moving downward. I could see that there was an opportunity that if we broke this level that we could go long. So I waited for the position. We went long over here. I went long literally on this candle, moved up to these highs, and then the FOMC market, the interest rate decision, interest rate cut occurred, and the market collapsed in. Now, I definitely should have known that it was happening, but I mistimed my days. I thought that the rate cuts was happening the following day and not that day. And I just literally mixed up my days, which was very unfortunate because I was sitting on a Friday. I should have known, but we all make mistakes. It's, a common thing to see. So yeah, this downward trend line was broken. I went long right over here. I held that position up. I moved my stop loss to break even, hoping that we were going to see the market move up to these highs over here. And the market broke straight back down. I got stopped out, and then the market basically continued selling off. So although I did not expect that to happen once this trend line was broken, yeah, that's just the unfortunate reality of trading. So outside of that, that's pretty much it in terms of updates. You can see that on the monthly, we gained what was it? We gained 1,600, sorry, we gained 16,000 points on the month of October. So you can see that October opened up over here. We had that big gap down on the 10th, and then the market just had this very strong recovery all the way back up to the upside. So what I am watching carefully is that we've had three very volatile candles on the daily. You can see long wicks to the upside and downside, which is showing that price is rejecting to both areas. So there are very strong buyers and sellers at this level. And what I'm personally hoping is that we can see the market moved back down to these previous breakout levels, this historic resistance, and see if the market can stabilize around about here and begin moving higher again. I still think the US markets, the Dow Jones, the NASDAQ, all of those different indices are definitely a dip buying opportunity. There's a lot of news and videos out there talking about that this is the end of the market cycle. Yes, it could be, but here's the difference is as a financial markets trader, the market cycle that they're discussing could be 1 year to 2 years to 3 years. We're not trading in that time frame. We're trading in time frames of days to weeks. So if we see the market pull back to this level and bounce off this level, even if it's a dead cat bounce and the market continues to break down, there still might be an opportunity for this support, this previous resistance level to become a new support. And we could see now that the market has broken above that level, has gapped open, we could see it sell back to this level and then bounce back to the upside. So that's something I'm watching here as more of a longer term trade. A long-term trade, I'm really meaning mid-term, like a couple days to a couple weeks. Short-term, normally a couple hours to a day or two. Outside of that, what else were we looking at? So in the previous live trade session, I spoke about the Euro CHF. So that was a very interesting trade. And I'm going to share the breakdown with you on this. So I had discussed the different targets that could be considered in this trade, and one of the targets that I was looking at was outside of where I believe the market was going to be moving to during that current period of time. So I had two positions that I didn't like the placement of, and as you can see here, if we scale out to the weekly time frame, these two green boxes were target 1 and then target 2. So target 1 was the bottom of this box, and we got very close to it towards the end of the week. So I'm just quickly going to move these a little bit closer to price because otherwise we're not going to see them. Come on. So this was target 1, this green box over here, and then target 2, I'm just going to move it a little bit closer so we can see that as well. I don't think we're going to see that on the 4-hourly, but anyway. So for target 1, the interesting part was we spiked into the bottom of that target, but then there was a huge amount of volatility. So what I was meaning with, there were two positions that I didn't like my execution on. When I saw the market moving down to this level over here, I decided to get out of those two positions in profit, expecting that this was going to be a new trend support that was set. So when I released this trade, we were sitting somewhere around about in this area over here. Then the market spiked up and then started to sell off again. What I identified though is I knew that this was going to be a very strong breakout once we broke this level. So you can see over here, this was a very, very strong downward trend that was forming. And you can see that 3 times the market broke from this level and fell back down below it. So I knew that when we would get to a point where this market was going to hit its breakout, we were going to have a very strong breakout. So I decided to close my two positions. Luckily, because of the Euro CHF being a positive interest rate swap on a buy, I was not wasting my money. but on my swaps, but I knew that I could get better execution on two of my positions. So I decided to wait till we got a breakout. And as we moved down into these lower zones over here, so as we broke below this level, I knew that this breakout here, this level was going to be respected for some time. And I was watching this play out in the charts. As the market broke down here, you can see that it sold, it bought back up to this trend line and then continues selling back down. And I could see that the market was respecting this level very strongly. When I saw the market break below this level and then break back above, I got into my position. So I was a little bit early, but then you could see the market broke back down and then broke out to the upside. So we had a very strong push to the upside. That's when we began to pierce target one's box. So if we go back to the 4 hourly, you can see that we pierced the bottom of the target one box. So it wasn't necessarily a time for me to get out of my position. But what I noticed is that the markets were basically trading above and below this horizontal line. So this was the 0.92768 level. And that was basically target, the bottom of target one. So I'm still waiting for this trade to continue moving higher. I'm watching this trend line very closely to see if this trend line gets broken. I'm going to have to get out of my position. Luckily, most of my trades, most of my entries are sitting around about here. I've got 2 positions here and then 2 or 3 positions lower down right at the bottom of this spike. So really, in terms of getting back into that fair value area, that's what I'm focusing on. As you can see, historically, the market has moved down to this level before and has tested this level before. And where did it go? Straight back into the fair value area. So that's really what I'm focusing on here. Now, we did it with the US oil trade. Now we're doing it with this trade. The US oil trade played out perfectly. I mean, if you just take a look at this, go take a look at the live trade session. Which one was it? Live Trader Talk 03. I mean, it played out literally perfectly. You know, when I put these green rectangles in, I said that if the market breaks below 60, we're going to see a new entry zone in this smaller green box down here, and we're going to see the market push back up to these levels. And look what happened. We literally had the market move. Now, I have not moved these green execution boxes since that video. We had the market move straight back up into that zone. So that is really what I'm looking with on the Euro CHF trade idea as well. So if we go back to Euro CHF, that's really the same thing I'm looking at right here. Is on US oil, you can see here, where's the fair value area? The fair value area is way above. I mean, if I were to take you can see that the fair value area is around about here. The center of these 2 ranges is where most of the price is trading. When the market falls far below that level, and it's not a specific asset, when it's a currency or it's a commodity like oil, oil is a regulated, it is a regulated price. They are always constantly looking at supply cuts versus production cuts to ensure that oil price stays at a very fair value level, because if it's too cheap, then it's going to be too expensive to drill out of the ground. And if it's too expensive, then no one's going to be wanting to buy it, and it's going to be too expensive to refine. So there's a very, very specific area where oil sits. And the same thing tends to happen with certain currencies. The euro is a big currency, and the Swiss franc is also a big currency, a very highly traded currency at that. So same with this oil trade. Fell below fair value area, it's going to move back there. And that's what you've seen with oil. I'm going to get back to this trade just to finish off here. So you can see that on the daily time frame, the market is now slowly moving back up into this fair value gap. So if we were to call this level over here, let me just drop a horizontal trend line, this level being the bottom of the range, you can see that price has broken below this range and has now recovered to the bottom of this range. So what are we going to see here? A lot of volatility inside this zone of target 1. And that's why I set target 1 here, because I knew that once price recovers to that level, we're going to see a lot of buyers and sellers stepping in. But I still genuinely believe we're going to see the market break above that level. So where my take profits set on target 1, half my positions are set on this horizontal line here. I don't think it's this exact line, but it's very close to it. So that will be target 1. Then target 2 will be once we see the market moving back up into this fair value zone. Now, will it reach the peak to target 2? It might not. But if you've already taken part of your position out, then it is worth leaving some of your position in to see if the market moves all the way back up to that fair value area at the 0.943 level. So going into the next trade, what was that trade? So US oil. US oil, we can see that the market has had a very strong recovery here. But once it made the strong recovery, we can see that on the daily, the market has basically begun trading sideways and slowly selling off. So I believe that the 60s level has been very strongly respected. You can see this red horizontal line is the 60 zone, has been very strongly respected now that the market broke down all the way back to the 56 level. So we broke just below 56.20 on the lowest low down here. From there, the market bought itself all the way back up to 62.20, which is a $7 bull run, which is a very big bull run. I mean, what's 56, 7 divided by 56? You're looking at over 10% bull run. So that's great to see. But as you can see, now that we've had that bull run, the market has begun to sell off back down to the 60s level. And what I'm anticipating here is that if we have a bounce off of this level, we could see the market moving higher. Now, in terms of this, I have not taken a position on it, and the reason being there's a lot of sideways trading around the 60 level, which would be where I'd want to put my stop loss if I was going long. And I don't really want to put my 60s level around a price level where my stop loss around a price level where the market is choppy, because you really want to see a very clean bounce beyond that level and then the market moving back higher again. So I'm not saying I've lost confidence in this trade, but I'm definitely watching very carefully to see if we could see the market moving back up to the 65s level. You know, given that we've had supply cuts through the EIA and EPA, I think that, sorry, not the EPA, through OPEC and the international IEA, International Energies Agency, I believe that we could see the market sit around the 60s level, maybe move back up to the previous high as well at 62.20. So if I see that there's a clean retest of the 60s zone and the market shows some good strong bullish engulfing, I'm probably going to wait for a trend to be established and then buy on the retest of that trend. So I'm not really going to buy on the bounce because there's no opportunity for a clean bounce over here. So I'm watching this carefully, but we'll see what plays out. Then the next trade that I mentioned, so I didn't give a very strong trade idea on this, but I did talk through it in the previous trader talk, which was the USD JPY. So what I was discussing in the USD JPY is that the market had retested these two levels here. So we were basically sitting on this candle when I shared this trade idea. And what I had mentioned is that, and now these trend lines have not been moved. So you can see that the market has respected these trend lines almost perfectly. And you could see how the market had bought up all the way into this level. It was nice and bullish, sold back down into this level down here. That's how we set up this trend line. So this diagonal trend line was set up based on this price test and this price test. When I had discussed this, basically I was mentioning that there's an opportunity if we break this resistance level, which I believed we were going to, we can see the market pushing back up to previous highs. Now, in terms of targets, I never set targets. This was a trade idea I mentioned in passing, but my targets would effectively be sitting somewhere around about, let me just insert a, I'm looking for my targets to be somewhere around about here. So in terms of target 1 and target 2, that's really what I'm looking at, is the market moving up to these levels and retesting these highs. So we could see that on the retest of this trend line, I watched the market pull back to this level, and I bought in literally on this exact touch right over here. I had the opportunity of watching the markets throughout the day, and I was trading in and out of the Japanese yen sell-off from these previous highs, because I thought, even though I'm going to be long on the position on a swing trade, I can still be short on the position, knowing that it's probably going to sell off from these previous highs here. So we could see this retest over here. It retested again on this level. We released the trade idea on the test of this resistance. The market sold off. I was able to sell off on the intraday. My big one was basically not selling off from the top, but waiting for this level to be broken. So I was really watching for, if this market was going to be ranging, I didn't want to be selling off into this position, because we'd basically have a sell off to this level and a bounce back up. So I basically bought in on the breakdown of this support level. I sold, I took a short position on the breakdown of the support level, and I watched the market sell off all the way down to here. Once I saw that there was a lot of sideways trading, I got out of my position. So I didn't have the best exit or the best entry, but that is often what scalping is. You're taking advantage of a price differential. Once I saw that the market was beginning to break down again, I waited for that opportunity to buy in, and I could see that this trend line was the price was getting very close to this trend line, and I bought in on my position. And I basically watched the trend, the trend form, and I had no idea there was going to be such a big breakout, but this came from the FOMC, the interest rate decision on the Japanese yen. Sorry, not the Japanese yen, the US dollar. So we had a very strong push during the FOMC meeting. That's this very big candle over here on the hourly. And then we had a sell-off back down to the downside. Often happens. The market's readjusting, and then we had a very strong push to the upside. So this resistance level was broken perfectly, but now what we can see is that the market is trading sideways quite consistently. So what I'm watching very carefully here for is, although I'm long on a swing trade that's much further down, I'm just watching very carefully here that if this position breaks down from this this trend line, I might sell into the position just to cover the loss for a period of time. And if we see a bounce off this level, then I'm going to probably close my sell order, add another buy position on this trend line, given that I've made profit on my sell orders, and then that can give me a bit of a buffer zone that I can see if the market might bounce from this breakout and continue moving higher to target. So that's what I'm watching very carefully, is if we can see the market moving higher to target over here, then we're in for it. But now in terms of my sell positions and managing, that's a bit of a hedge that I'm using, that if the market, we do see a pullback, that at least I've got a sell position in, that I'm protecting my profits that I've already made, and then I can close out that position and add another buy position if I feel like I'm going to see more momentum in the market. So in this market, I'm watching the momentum very carefully. I'm watching market sentiment as well. In terms of looking at the overview from the monthly to the weekly, in terms of monthly, you can see it's been a very strong month. So the market in October, price on the USD JPY was extremely bullish. So we've had a very strong push to the upside. But what I'm watching very carefully is, after these very strong push months, we've had sell-offs. So you can see over here, we had a very big bullish engulfing candle followed by a red month. We had another bullish engulfing candle followed by another red month. Here we go again, another bullish engulfing followed by a red month. So that's more of the recent price data coming from around about the beginning of 2024. So I'm watching very carefully if on the candle opening on in November, if we do see a push to the upside, I'm hoping that we can reach at least target 1, but if we don't, I might see that we're going to pull back to that retest, or possibly land up bearish on the month. So I'm being very careful on my positions here and not expecting too much out of it. And then in terms of an overview, what I wanted to just show you is a breakdown of a couple positions that it's important to take a look at what the market's doing, just that you know where the market could be moving in terms of your monthly outlook. So we've gone through the Euro CHF, USD JPY, we've covered oil, and then US 500 we've done. I want to move into gold now. So gold has had a very volatile month. I've been trading gold on the intraday quite a bit, and I'm not going to lie to you, it's been really stressful. Yeah, it's definitely, you almost want to be on the bigger time frames when you've got so much volatility moving in the market. So we could see that the beginning of the month we had very strong push to the upside, and then we had quite a big sell-off. This was around about the 10th. So you can see over here, this was, no, the 10th was much further back. There we go. So this was around about the 10th. We had a very strong sell-off. This was from the news with Trump. Very strong sell-off followed by a very strong push to the upside. And this was one of the strongest months we had in, give or take, I mean, this push to the upside was probably, let me see what the push from the open was. You're looking at 52,000 point move. This was one of the strongest bull months that we had. The previous month in September, we had a very strong bull month. That trade idea that I shared was fascinating because I shared a trade idea, when was it? Here we go, gold trade idea 2 months ago. So I had discussed this trade idea in August, and I was discussing the movement of this triangular breakout. And what was so sad about it is I got out of that trade. So I was holding it much longer than I expected, far beyond my second target. I could see this beautiful breakout forming, but I had no idea the market was going to continue moving as high as it was. And honestly, if I held that trade, I probably would have tripled my profit just on that trade position alone. But it is what it is. You receive the data, you learn from it, and you move on. So this market continued moving higher. We reached a double top over here. So you can see that the market tested a double resistance test, and then sold all the way back down to the downside. So the overall market performance from the open, you can see around about over here, which was the 1st of October, to here, we've had a push of about about 14,000 points we've added. Let me see here, what was it? Yeah, 14,070 points we've added in the month of October. So although a lot of people are discussing this as the end of the bull run for gold, I genuinely don't believe that's possible. Given that this is, I think it's been a 9-week consecutive bull run. So let's just see here, 1, 2, 3, 4, 5, 6, 7. So we have 7 weeks, 8, 9, give or take. Yeah, so 9-week consecutive bull run. Yes, there is a chance that we're going to see a market correction, but are we going to see a market correction back down to these breakout levels that I discussed 2 months ago? I don't think that's possible. I think we're going to have a possibly quite a lot of volatility over here, but I don't believe we're going to have a sell-off all the way back down to these lows of, what are we sitting at here? 3,400, give or take. Yeah, I remember I went long at about 3,350, so that was around about over here. And I feel like, yes, we could see the market move down to this level around about the open of the previous month. As we can see here, the market has tested that level, but I feel like there could be an opportunity for another bull run. So I'm watching this very closely to see if the market is going to do that. Now, in terms of trading this, all I can say is strap your thunder pants on because it's volatile. But you can see that this level over here has been one that I've been watching very carefully to see if this market gets, this price gets broken or not. And then you can see over here, there is a very strong level established as well. So there's a very strong support and very strong resistance. So we could see the market ranging inside of this level, or we could see the market break from this level and continue moving higher. So it's a possibility that that will happen, but it's entirely possible that we could see the market retest these lows of the 3800s again. So for me, this is a dip buying opportunity. I'm watching carefully, but the problem is the volatility of the gold market. You cannot just open a position and leave it open when you're trading on leverage. You can possibly do that when you're trading one-to-one. But yeah, if you're trading on leverage, you cannot leave a position open on the gold markets given the volatility. In terms of the next market update that I wanted to take a look at was Bitcoin. So Bitcoin has been interesting, and I think it's something that a lot of people want to discuss. Is Bitcoin, I posted a video up, let me see here, when was that? It was a live trade, my first live stream. So that was streamed a month ago, Bitcoin's next breakout incoming. So I discussed in that, and this is the same charts I used. I try to preserve these charts that you see the same thing depending on which video you watch. I don't clean the chart up. I keep the same lines up that were in that video. But you can see that the 100K zone, what I discussed in that video is that we're going to see a correction back to 100K. At that point, we were sitting around about these levels over here. And I had discussed that there's an opportunity for the market to come back down to the 100K zone. And that's what we're seeing. So the market pushed all the way back to that, up to that 123,000 zone. We had that massive sell-off on the 10th of October. Some unobscure individual made, I think it was $87 million shorting Bitcoin, and they were shorting Bitcoin right up to the minute before Trump posted. So I'm interested to find out who that person was, but we'll probably never know. But, you know, this short was there to take. You know, as you see, this market was broke these new highs, and you can see the volatility in the daily candles. There was a very strong bullish engulfing candle, a bullish candle that covered half of the distance of that price, followed by another bearish candle. Now, there was definitely an opportunity to sell into this trade, but I think one of the problems is the volatility of Bitcoin means a lot of traders are not focused on this. And by traders, I mean the big guys, big traders, big trading firms that are getting in on these positions. Now, I do know there are some, but definitely not all of them saw this opportunity to short this, this asset. But now we can see that the market is sitting around that $110,000 level and is not finding way to move higher or lower. Now, just to add to these chart studies, you can see here that a level that's been very strongly respected is around about $115,000. So you can see that price has moved around this level quite consistently. Price is testing this level, breaking back down, testing this level, breaking back down. And then the same to the downside, you can see this level at around about $107,000 has been tested a lot as well. So there is that range. It's about a $10,000 range. Most of it is above the $110,000 level, but you can see that price continuously breaking down, testing below 110. And that's why I still believe we're going to see the market move back to $100,000. Now, we could see some interrange trading inside of this zone here. That's entirely possible, but I'm very careful to set trades in the zone expecting a high potential upside because I still believe there's an opportunity to see the market moving bearish. Now, one of the other things that you can see as well is that we're making lower highs on this trend. So not on this trend, on this range. So lower highs followed by the same support level being tested. Now, a lot of people would say, oh, this is potential for a breakout to the upside. Well, personally, I feel like there's a potential for a breakout to the downside as well, because you can see inside of this range here, the market is overall moving to the downside. The average fair value price is moving down. So that is definitely something to watch and be careful of. But as you can see here on the weekly, the market is overall bearish. So you can see that the open was over here. We had the open around about, let me take a look. The opening was around about over here. We had an opening on this daily candle. We had a huge spike to the upside followed by a sell-off. So the overall loss on Bitcoin, obviously the volatility is out the window. So we're sitting at 395,000 points, so almost 400,000 points sell-off in this market alone. Now, in terms of the last trade that I want to give an update on, that's where I want to share the trade idea, and that is on Euro US dollar. So Euro US dollar is looking like quite a juicy trade opportunity. And this for me is going to be a sell opportunity that I'm looking at. So just to give you a breakdown of the technicals that I'm looking at right now is the monthly stochastic is overbought on this market. And as you can see, when the stochastic has been overbought on a currency, that's usually when the central banks will step in and start making adjustments. It's very common. Like I'll see when the central bank all of a sudden changes its approach and says, oh, we're going to stop cutting rates or we're going to start cutting rates. I'll check the monthly chart, I'll check the stochastic, and it's either overbought or oversold. So as we're seeing here, the market has become overbought on the euro dollar, and all of a sudden now they're starting to cut interest rates in the US. So that is definitely something that I'm watching very closely, is that the monthly stochastic is overbought. We've got a lot of chop on the monthly trading over here. You can see that over the last 5 months, there's been not much direction to the euro dollar. And I feel like we could see an opportunity for the market to move lower. Going into the daily, we can see that there's a support level here that's being tested. And just like I mentioned with Bitcoin, there's a bearish trend forming where the overall price is moving downward. Now, what I'm watching very carefully is that if this trend line gets broken, the support level at 1.15 is broken, we could see the market move all the way back down to the 1.12 level. So in terms of a continuation, we could see the market move to 1.12. A retracement, we could see it move all the way back up to the 1.17 level, around about over here. So that range is between 1.18 to 1.12, give or take. So if I were to take it, I'm looking at round about this area here. So we could see the market bounce from this level and continue moving lower. If I were to show you an idea, I'm expecting us to see the market move lower like this, and then you're probably going to see a retest of this level followed by the market beginning to move lower. So that's what I'm watching very carefully to see if we can get in a sell position on this trade. Now, if the market moves up to the retest the top of this bearish range, I'm probably going to get in on a sell position. But what I'm going to be watching for very carefully here is the candlesticks. So I'm going to be watching for a bullish and bearish engulfing candlestick, or a bit of a spinning top candlestick right at the top of this range. And then I'm going to get into my trade and hope to see this support level get broken very strongly. Now, if we see that the market has broken this level already and moves down to test the bottom of this range and possibly moves up, I'm going to enter on the retest. So something that I forgot to mention as well is that the Federal Reserve has just cut rates to 4%. They cut it by about 25 basis points. The reason, however, why I still see the opportunity for the dollar strengthening and not weakening is that the strengthening is that they believe, although the rate has been cut, they might not be cutting rates anytime soon, and the eurozone inflation just fell to 2.1%. So in the Eurozone, they might begin to cut rates before the US cuts rates. And with the interest rate differential being 4% for the US dollar and about 2.15% for the euro, you could see that interest rate differential actually widening. So although the interest rate differential on euro dollar is good, what it is possibly giving is that there's an outlook for traders to see on the long term there could be a big opportunity for short selling the euro dollar towards the end of the year. So fundamentally, this definitely looks like an opportunity to get on a sell side of and be able to short the euro dollar in towards the end of the year. So that's going to be what I'm watching very closely now as a new trade idea. Now, if you have any questions about trade ideas, anything interesting that you want to share, make sure to drop a comment down below and let me know, and then we can always address those in the next live trader talk. But once again, thanks so much for tuning into this video. I hope you got something interesting out of this, and I'll make sure to see you in the next one. Cheers for now, everyone.